The United States is not ready for what's coming. Donald Trump just started the greatest trade war in the history of humanity. So what's coming for the US is something that a lot of people cannot possibly comprehend right now. The United States is undoubtedly the greatest and the wealthiest economy that has ever existed. But the rest of the world isn't far behind. Especially in the last 50 to 60 years, the rest of the world caught up with the United States. And this trade war is going to cost the United States a lot more than a lot of people imagine. So here in this video, let's break down what is coming from the United States. Let's find out how painful this trade war is going to be and what are the chances of Trump winning this trade war. If you're ready, give this video a thumbs up and let's get right into it. Most of the tariffs were hit the European Union and Southeast Asia. Japan, China, India, Vietnam, and the rest of the countries in that region. There are some countries that were hit in the African continent, but these countries aren't economically enough powerful in order to have any kind of meaningful impact. But the goal of the United States is to reduce the trade deficit with most of these countries. And 10 to 15 countries represent most of the trade deficit for the United States. At the top of the list is obviously China, where the US has the greatest trade deficit of around $300 billion. And that's actually not that bad compared to what it was before the first Trump presidency. Because if you go back to 2012, 2015, and 2014, when Obama was the president, then the trade deficit was much larger. It was probably twice the amount that it's today, or maybe even twice. And also given the fact that over the last 15 years we had massive inflation, then the dollars back in the days were much more valuable, which means that the trade deficit was significantly larger back then than it was today. The second on the list obviously comes the European Union. Here we are talking about Germany, France, Italy. Individually, those countries might not represent a huge percentage in the trade deficit, but the European Union work as a huge bloc, and this is probably the second world's largest economy. The EU economy is even larger than the Chinese economy. So as an entire bloc, they represent the second largest trade deficit with the United States. And closing that deficit means that closing $236 billion in trade. That is followed by Mexico, of course, because a lot of technology, a lot of cars, a lot of things that you buy in the US are mostly being manufactured in Mexico due to the free trade agreement that the United States has with Mexico. Because out of the three countries in North America, Mexico is the poorest country. And even though that economically they've been growing recently, like their GDP per capita have been growing to like $11,000 or $12,000, that's as much as China. Most of the people in Mexico are still pretty poor, and the cost of labor is so small that it makes no sense to produce anything in the US when you can use the free trade agreement and produce that locally in Mexico. That is followed by Vietnam, that has been winning the trade with the United States as China started diversifying its economy from the United States. Then we have Taiwan, Japan, South Korea, and these three countries, or these three Asian countries, represent a huge chunk of the free trade deficit that the United States has. And closing the trade deficit with those three countries already represent a huge win for the United States. And that is why if you look at what's happening in the news right now, those three countries are combining their forces and trying to hit the United States as one giant force. They represent 20% of the global GDP. And that is $23 trillion. Compared to the United States, that is still not as much as the US, but the US GDP is $27 trillion, and $23 trillion isn't that far behind. And countries such as Japan, South Korea, and China are already pretty wealthy countries. Of course, if you look at the GDP per capita of China, it's around $13,000. So if you give it a closer look, there is a large portion of Chinese population with a GDP per capita of around $50,000 to $100,000, probably more than that. But due to the fact that, or due to the size of the Chinese population, the overall GDP per capita is much lower. But these three countries have created a free trade agreement between themselves. Now, this free trade agreement is not finalized, and there are still a lot of things to actually consider and work on. But they're actually working on the fact to eliminate all tariffs between these three countries. And Japan and South Korea, if you just take two of these countries, because China is already an adversary or a real competitor to the United States, but South Korea and Japan are not competitors. They're actually hosting the United States military bases all across them. And what Trump is doing right now is pushing China or pushing Japan and South Korea to become closer ally of China and finalize the trade agreement or the free trade agreement that these countries have been working since 2012. And if they respond to the United States as one giant bloc, then the United States will actually have to respect these countries and will have to come to the negotiation table to find a solution that's not just suitable for the United States, but they might actually sign a trade agreement that is much more even favorable to those countries, especially if the United States wants to keep Japan and South Korea as their ally. The United States wants to keep its global hegemony, but in order to do that, you need to have military bases all across the globe. And Japan and South Korea, both of these countries are allies of the United States and are letting the US to have their military bases over there. And part of that agreement is for them to have favorable trade agreements with the United States. So if the US cuts those trade agreements, then they will become closer ally of China and not the United States. But the US has imposed tariffs not just on those three countries, but the entire Southeast Asia. And that includes Indonesia, Malaysia, Singapore, Vietnam, Philippines. And all these countries for the last 15 to 20 years have been working on their own trade agreements. First of all, they started ASEAN, and that ASEAN includes something between 6 to 12 countries, the countries that you see on the list right here. But there is also something called Regional Comprehensive Economic Partnership. And these countries combined represent a third of the global GDP and $30 trillion worth of GDP. They also represent 30% of the global population. And the entire point of this trade agreement is to eliminate tariffs as much as possible. The lower you lower down the tariffs, the more trade there is going to be between the countries. Because the moment you have tariffs, then you're thinking twice whether it makes sense for you to sell something in another country. So if you have Japan and China and they entirely eliminate tariffs, then doing business between Japan and China is going to be like doing business in one giant country. So more trade is going to flow and more interdependent those countries are going to be on one another. Like take the United States, for example. It's much easier for the United States to do business between California and Nevada, for example, or it's much easier to do business, for example, between New York and Wisconsin, because both of these states are part of the entire United States and they apply the exact same rules. They have the exact same quality rules, for example. So you can buy something from New York and sell it in California or in any other state. So when those countries sign trade agreements between themselves, trade is going to flourish between them. Of course, it's not in the favor of the United States, those countries to trade between themselves much more than the United States. But with the tariffs that Donald Trump has imposed right now, it's literally pushing those countries to take alternative measures because they cannot possibly afford to do something like that and afford to lose their economies. Japan knows the lesson because they've actually gone through something like that back in 1980s and 90s and it led to an economic catastrophe. Back in the days when Reagan was the president of the United States, they signed the Plaza Accord where they devalued the dollar in order to close the trade deficit between Japan and the United States. And it led to the bubble in Japan to entirely burst because they started losing the competition in the United States. And that's how the Japanese economy went into a stagflation. And since 1996, the Japanese economy haven't actually grown. Their GDP was around $4.5 trillion back in 1996. And guess where their GDP is right now? It's still $4.6 trillion. They have tried to inflate the entire economy. They borrowed trillions of dollars. Their debt to GDP ratio is around 250 to 300%, but none of that has helped. So Japan cannot possibly afford, even though that it's an ally of the United States, if they agree to something like that ever again with the United States, it's not going to push the Japanese economy into another stagflation. It would literally lead the Japanese economy into a depression that will keep shrinking the Japanese economy over the next 50 to 60 years. especially when Japan is going through multiple demographic problems, which is why it might actually, or it is already aligning itself with China to respond to the United States. Something like that was impossible to imagine even a year ago. If you pay close attention, Taiwan is not part of this trade agreement because you cannot get China and Taiwan in one trade agreement since China considers Taiwan part of China. And Taiwan is a major trading partner of the United States. And Trump has also imposed tariffs on Taiwan as well. That could push a lot of Taiwanese companies, especially TSMC, which is the largest producer of semiconductors in the world, to move away from Taiwan into the United States. And over time, Taiwan might actually become part of China. So if you look at Trump's tariffs, they also massively influence the Taiwanese economy as well, and the goods that come from Taiwan. If the US confronts Japan individually, Japan has no chance. If the US confronts South Korea individually, Indonesia individually, Singapore individually, none of those countries can stand a chance against the United States. Which is why those countries are coming together and they're creating alliances to respond to the US tariffs with one shot. And if they combine their forces, of course, their economy is suddenly much bigger than the US economy. The same thing is being done by the European Union. The EU economy is $19 trillion. Again, that's not as much as the US economy, but $19 trillion is very close to $27 trillion. And as a bloc, they represent a huge economic power. Their total exports is $2.8 trillion and their total imports is $2.7 trillion. And a lot of the European countries are highly developed. They produce high tech. If you look at Germany, Germany produces some of the most advanced cars out there. They manufacture some of the highest technologies out there. If you look at France, it is one of the largest producers of nuclear energy. If you look at the United Kingdom, well, the UK is no longer part of the European Union, but the rest of the Union, even though that not every single country is highly developed, they at least have a GDP per capita of at least $15,000 to $20,000. And the wealthiest countries have a GDP per capita something between $50,000 to $80,000. And that's why they're responding to Trump. They're not swallowing like UK is doing right now, because UK individually has no chance whatsoever. But the European bloc is so huge that they know that they have a lot of leverage over the US companies. The US companies such as Apple, Microsoft, Coca-Cola, they want to keep selling to the EU market, which is why as an entire bloc, they're responding to the US tariffs by raising their tariffs. They have already introduced tariffs against US agricultural products, but they can take it one step farther and they can start introducing tariffs against the US electronics. They can start putting tariffs on the US Coca-Cola, on iPhones that come from the United States, on Teslas and the rest of the products that are being manufactured by the US companies. They can literally just put the rules and the systems and the terms that is going to be much more advantageous to the European Union than to the United States. But here is where the worst thing actually comes in, because if you take the United States on one side and the European Union plus Asian, South Asian countries, especially on the other side, suddenly the entire equation changes, because the entire GDP of the US is around $28 trillion. On the other side, the entire GDP of those countries, or the ASEAN plus 6 countries plus the European Union, is almost $52 trillion. So even though that per consumer in the United States is a much larger economy, the US stands no chance against a GDP that is almost twice the size of the US GDP. So if Asian plus countries start working closely with the European Union, and I know that it's very difficult to imagine right now, but a year ago, I wouldn't actually imagine that South Korea and Japan will together work with China to respond to the United States. So don't be surprised that within the next couple of weeks, the European Union is going to work closely with China and Japan and South Korea, and they can even come up with tariffs against the United States. And that is something that the United States cannot possibly imagine right now. Like prices and inflation in the US can seriously actually rise, and they can actually have devastating impact on the entire US economy. And a lot of people are going to suffer because this crisis can actually be way worse than the crisis of the 2008. A lot of US companies such as Apple, Microsoft, Coca-Cola, they generate half of the revenue from the rest of the world, and that mostly includes the European Union and the ASEAN countries plus 6 countries. China, Japan, South Korea, Indonesia, Malaysia, and those countries. These are very rich countries. This is a GDP of $52 trillion. So if Apple, for example, stops selling their iPhones in all of these countries, in the European Union and China and the rest of the world, what do you think is going to happen? Their sales are going to plummet by at least 50%. What's going to happen to the valuation of Coca-Cola? What is going to happen to the valuation of Microsoft? And there is a long list of the US companies that depend on the international trade. None of these countries are going to collapse because of these tariffs, but they will see their sales plummet. You also have to consider the fact that all these countries hold $7.5 trillion worth of US debt. And when you're holding someone's debt, you're holding a lot of leverage over those countries. So they have a tool in order to pressure the United States. During these unforeseen circumstances, there are going to be a lot of companies that are going to suffer. So don't be surprised if you can look at the market and the market starts crushing. When you see some of your favorite stocks, for example, going down. But you have to understand that every single situation or every single crisis presents an opportunity. Maybe in the short run, some of these companies are going to suffer dramatically. Now, don't be surprised if some of these companies are going to go bankrupt as well. But the real great companies are going to come out of this crisis or emerge out of this crisis victorious, and their valuations is going to be much higher than they are right now. But during this market crash, they will suffer dramatically. So get yourself ready, prepare yourself, and make sure to take advantage out of it. And of course, do not ever invest unless you know exactly what you are doing. And if you want to invest with me, then you can check the link in the description. That's it for today, guys. Thanks for watching, and I'll see you in the next one.